Hello everyone. Our subject is auditing and assurance as per NEP 2020 from MCOM part 2 semester 4. Our question is explain the core principles of accounting ethics. These are the principles including accounting ethics. First, integrity. Second, objectivity. Third, confidentiality. Fourth, professional competence and due care. Fifth, transparency and fair presentation. Sixth, professional behavior. Our first point is integrity. Accountants must always act with honesty and truthfulness. Financial statements should be prepared free from deception or manipulation. Misleading financial information can result in misguided investment decisions, regulatory scrutiny, and corporate failures. Which means, as accountants, it's very important to always be honest and truthful. When we prepare financial statements like balance sheet or income statement, we should never lie or try to hide the truth. Everything should be clear and correct. If the information in financial report is wrong or made to look better than it is reality, it can cause big problem. For example, investors might put their money in a company thinking it's doing well, but in reality, it's not. This can lead to big losses or legal troubles, and even company can shut down. So always remember, in accounting, honesty is the best policy. Our second point is objectivity. Accounting professionals must remain unbiased and independent in their work. They should avoid situations where personal interests or external pressures influence their professional judgments, which means, as accounting professional, accountant must always stay fair and neutral. That means accountant should not take sides or let personal feelings or outside pressures affect their work. They should not take any personal advantage. Accountant should take proper judgments, honesty, and do what's right, no matter what. For example, if an auditor is checking a company's account, they should never accept gift or money from that company because that can create a conflict of interest. It might attempt to ignore mistakes or hide the truth just to please the company, and that's not okay. Our third point is confidentiality. Accounts handle sensitive financial information that must not be disclosed to unauthorized parties unless required by law, which means accountants often deal with private or sensitive financial information. That means they know things that others don't, and it's their job to keep that information safe. They should not share it with anyone who is not allowed to know unless the law says they have to do. For our fourth point is professional competence and due care. Accountants must continually update their knowledge and skills to ensure their work meets the highest professional standards. They must also exercise diligence in financial reporting, which means accounting rules and standards keep changing. So, accountant must always update their knowledge and improve their skills to make sure they are doing their job the right way. They also needed to be careful and responsible when preparing the financial reports. For example, a financial analyst should regularly learn about the latest changes in the rules like IFRS or GAAP. These are the global accounting standards, and if they don't follow them, the reports might be wrong or even illegal. So, accountants should always remember to be a good accountant. Keep learning and always double check your work. That's how accountants maintain high professional standards. Our fifth point is transparency and fair presentation. Financial statement should be comprehensive, accurate, and free from misrepresentation. Organization must fully disclose financial risk, debts, and significant accounting policies, which means when a company prepares its financial statement, everything should be complete, correct, and honest. That means companies should not leave out important information or try to make things look better than they really are. Company must clearly show things like their debts, financial risk, and the methods they used in accounting. Hiding these things is wrong and can mislead people or investors who are reading the reports. For example, if a company has a lot of loans or money they owe, they should show that clearly in their financial statement. They should not hide it just to make it the company look stronger than it actually is. So, companies should always remember financial statements should always be clear, honest, and tell the full story. Sixth point is professional behavior. Accountants should comply with relevant laws and accounting standards and should not engage in unethical or illegal activities that could damage the credibility of the profession, which means accountants must always follow the law and stick to the proper accounting rules and standards. They should never do anything that is unethical or illegal because that can harm not just the company but also the reputation of the whole accounting profession. For example, a company should never try to breach a tax officer just pay less tax. That's illegal and completely wrong. So, accountant should do what's right, follow the rules, and never take shortcuts. That's how accountants earn trust and respect. Conclusion: the main principles of accounting ethics, such as being honest, fair, careful, and loyal, are very important for all accountants. These rules helps them prepare true and clear financial information, keep secrets safe, avoid personal advantages, and stay up to date with changing rules. When accountants follow these ethics, businesses, investors, and the public can trust their work. It also keeps the accounting profession strong, respected, and free from the fraud or misuse.